This is BTV Chinese Channel B United Competition. Hello everyone, I'm Microphone. Today, in our special National Day program, we're going to review which altcoins have truly stood out over the past 6 months. This year has been especially lively, particularly with meme coins and all sorts of altcoins booming. It's definitely one of the top 3 most exciting years in the crypto world in the past decade. Every day, when you open your social media, it's either some meme coin skyrocketing and making people rich, or some coin turning red with massive gains. But if we look at the overall industry data, it's a tale of 2 extremes. What people feel and what the data shows are 2 completely different worlds. Some altcoins are being worshipped like gods, while many more have fallen to the ground, ignored by everyone. Actually, the logic behind altcoins is very simple. The altcoin market isn't about luck, it's about momentum, platforms, and liquidity working together. In fact, what I want to tell everyone is that, except for Bitcoin, everything else can be grouped as altcoins. Does Ethereum count? Yes, Ethereum is considered the king of altcoins. What are altcoins like? They're like a game of strategy, like stock market speculation, where momentum and fundamentals are intertwined. But the question is, among altcoins, who are the real managers and who are just bubbles? Today, let's take a look at the most active altcoins in the first half of the year and see what the real driving logic behind them is. As ordinary people, as retail investors, how should we position ourselves to seize the next opportunity? According to CMC data, among the top 100 altcoins, about 70% have outperformed Bitcoin's average growth of around 80% in the past 6 months. However, about 30% of coins have stagnated or even started to decline. The larger the market cap of a project, the more stable it tends to be. For example, Ethereum, BNB, and Solana have all recorded double or even triple-digit gains. As for small and mid-cap coins, the polarization is much more pronounced. For instance, star concepts like meme coins and short-term AI concepts can double in value, but lesser-known coins are completely ignored. So the reality is that the Matthew effect among altcoins is becoming more pronounced rather than a situation where all boats rise with the tide.
Foam has risen by about 452% since the beginning of the year. 17% of its gains are backed by BN. Originally known as BannerX BNX, it rebranded and transformed after Gamfight exited, preparing for a new phase with refreshed liquidity and increased attention. As BNX was renamed to Foam, BannerX was revitalized as Foam, with the platform focusing on token launches, momentum building, and platform synergy, providing reasons for capital to make a second bet. Endorsement from major players IzKey, CZ, Changpeng Zhao has repeatedly promoted BNB chain, and as a result, both capital and community interest have flowed back. Foamim is also the only MIM launch platform that it has explicitly supported, attracting both traffic and speculative funds, which has accelerated Foam's price rise.
From the comprehensive perspective of BNB Chain, I genuinely feel it's even significantly stronger and more robust than both BNB Chain and BNB dogecoin. I am a dedicated protector. Indeed, I am a steadfast protector at a remarkable 90%.
OKB's 6-month increase is about 306%.
25%. It's the direct offspring of HKEX, coming with its own application scenarios like trading fee discounts, voting, and new coin launches. When bull market trading volumes explode, the platform's profits soar, and the platform token naturally rises as well. In recent years, HKEX has been developing DeFi wallets and Learn 2, creating even stronger synergies. In conclusion, high-quality platform tokens are like money printing machines. HYBE's 6-month increase is about 122%.
72% relies on DeFi hype and product experience. Its perpetual contract trading volume once approached $400 billion, and in August, its fee income was about $106 million. Frequent market activities combined with top-tier partnerships have created a positive feedback loop between product traffic and token demand.
Hyperliquid was a hotshot in the first half of the year. It not only launched a native stablecoin called USDH, but also directly put its issuance rights up for auction. Think about what this equates to: treating stablecoins as infrastructure assets, forcing institutions to compete for a share. Of course, the winner ultimately fell to Native Market, a new company that even established institutions haven't played with. Its approach itself is a build-up of momentum, drawing attention and creating a scarcity effect in the market. Furthermore, it's a story of full decentralization. Of course, we have to admit that classic coins won't give up. For example, Ethereum continues to outperform Zero in terms of market capitalization, while the altcoin Solana continues to attract fans with its performance and explosive growth. For example, Tron Optimus serves as the diversion point for this traffic. The framework continues to rely on community interconnection, the community, and the constant posting of memes to create a short-term surge. There is no doubt that the hotspots in the second half of the year are AI and RWA concepts. The most profitable people in the bull market are not gamblers, but casino owners. Everyone looks at platform coins such as OKB and KCS. They naturally have traffic and application scenarios based on exchanges. Retail investors are chasing altcoins, and exchanges are steadily earning community fees. The top wealth printing code is actually very simple. It depends on who is running the casino. There are also many dark horses in emerging fields. Tokens like HyperDeFi rely on momentum and liquidity to attract cash flow. But the logic is also very straightforward. When the hotspots recede, it is possible to go from revenge to zero.
Overall, considering all the factors and aspects we have discussed and analyzed, it is clear that the situation presents a complex but ultimately manageable challenge.
The market cap data tells the same story. The market share of altcoins compared to Bitcoin once rebounded to 35%, an increase of nearly 10 percentage points year on year. The altcoin index rose by 80% to 120%, significantly outperforming Bitcoin. The capital rotation path is clear. Exchange tokens first enjoyed dividends, DeFi and derivatives picked up the on-chain hype, MIM exploded during the bullish sentiment period, and then WA and AI became the next hot topics. However, risks are also accumulating. Small cap coins fluctuated by 70% to 80%, and if Bitcoin drops sharply, the pullback in altcoins will be magnified several times. Privacy coin XMR remains a long-term regulatory pain point.
In the first half of this year, the core story that everyone hyped the most was RWA. Whether it's a business, a merchant, a company, or an association, everyone wants to try their hand at RWA. In my opinion, only standard financial assets, such as USDT and USDC, which are pegged to the US dollar and US Treasury bonds, are naturally suited for issuing RWAs. But in reality, we've also seen tokens like XOUT and PAXG surge into the top 20 tokens by market cap, proving that bringing real-world assets on-chain is no longer just a slogan. People are already trying it. Sooner or later, a successful case will be right in front of us. In the future, it's truly possible that bonds and real estate could be brought on-chain. Whether or not this narrative ends up in shambles 3 or 4 years from now, right now, it's a story everyone is chasing, and at least the traditional capital markets recognize it. At the same time, in the crypto world, the old narratives like Ethereum, Ripple, Litecoin, and Chainlink, these veteran tokens remain steady like evergreen trees in the arena. But only one token, Monero, XMR, stands out, highlighting the long-term conflict between compliance and privacy.
All right.
Let me ask a question. Why have altcoins become so popular this year? Is it just luck? Or is there something else going on behind the scenes? Next, let's break it down together and see what forces are really driving this round of the altcoin market forward. For example, in this round of the altcoin cycle, the US Federal Reserve had been raising interest rates all the way, but now they've suddenly changed course and are hinting at rate cuts. As interest rates go down, money becomes cheaper, and naturally, people's appetite for risk increases. So let me ask everyone, among all high-risk assets, which one can withstand the pressure the most? Of course, it's cryptocurrencies. Plus, as soon as the Trump administration came in, they relaxed regulations, so the entire crypto market suddenly felt a lot less anxious about compliance. People became bolder and more eager to innovate, which is why altcoins took off with the momentum. When the wind blows, even pigs can fly, let alone altcoins, which have even higher leverage.
After Donald Trump was elected, the United States' policy stance toward cryptocurrencies clearly became much more favorable. For example, the significant news that crypto assets would be allowed into 401k retirement plans greatly boosted institutional confidence across the financial sector. On the other hand, the Federal Reserve maintained a consistently dovish stance in the first half of 2025, with the probability of a rate cut in October once exceeding a remarkable 90%. The net inflow into Bitcoin, Ethereum, and exchange-traded funds, ETFs, exceeded $50 billion within the year, effectively flooding the market with substantial liquidity. As a high beta sector, alternative coins or altcoins naturally became the primary focus for capital actively chasing higher returns. Every round of altcoin rallies always revolves around the major moves in Bitcoin and Ethereum. This year, Bitcoin has risen by 55%, and Ethereum has seen double-digit gains, which first stabilizes market sentiment. Big money is anchored to Bitcoin, and institutions are holding down Ethereum. Once they take off first, the market gains confidence. After that, funds that find Bitcoin too stable and Ethereum not aggressive enough shift to altcoins, seeking higher leverage and explosive growth potential.
This round of the bull market actually doesn't have a single narrative. Instead, it's a flourishing, multifaceted state where everyone resonates together. People are watching DeFi derivatives and liquidity protocols constantly innovating. Projects like HyperGMX are leading the way in the entire DeFi sector. RWA is bringing gold and bonds on-chain, making XAUT and PAXG new investment hotspots. The combination of AI and blockchain, such as FET, or the hype around the Layer 2 sector, is helping to ease congestion on the mainnet, with Arbitrum and Optimism both diverting cash flow. The meme coin sector relies on social buzz and viral spread, building momentum on multiple fronts and providing capital with greater room for imagination and more reasons to bet in the digital world.
Trump's B-coin is the most typical politically charged meme coin of 2025. It was launched in January with 200 million tokens, and its price skyrocketed from $10 to over $70, with its market cap soaring rapidly. However, the price then plummeted by more than 90%, and a large number of retail investors suffered heavy losses due to selling pressure and token unlock events.
So this incident gives us a vivid lesson. Relying on hype driven by emotions can push prices up explosively in a short time, but whether it can last, whether it has any real utility, whether token releases are transparent, and whether liquidity and demand can remain stable, these are all things everyone needs to consider. Among all these factors, retail investors who actually jumped into the pit of Trump's policy-driven and politically charged coins should really only play with money they can afford to lose. Don't go in with too heavy a position, and you must set a stop loss, otherwise you could find yourself stuck at the peak in no time.
OKB and KCX are able to maintain their value mainly because they are backed by exchanges. Exchanges come with a huge user base and stable trading volume, and platform tokens can be used for things like trading fee discounts, launchpad participation, governance voting, and other needs which firmly lock in their demand. In a bull market, when trading fees surge, the price of platform tokens rises accordingly. They serve a dual role as both a cash flow tool and a gateway for speculation. This year, the crypto world is more social than ever before. Meme coins rely on social media for dissemination, while AI and RWA coins depend on momentum and diffusion. Twitter, Discord, and Telegram have become barometers for capital flows. Once emotions align, funds pour in like a tidal wave. The explosion of hot altcoins is essentially the amplified herd effect of social networks. The risk of altcoins is that their prices are magnified in a bear market downturn, but in a bull market, they act as accelerators. When Bitcoin rises by 50%, many altcoins can multiply 2 to 5 times. Capital tends to favor high beta assets, seeking higher risk and higher returns, so altcoins often outperform Bitcoin in bull markets, becoming the target for retail and short-term funds.
After saying all this, the question everyone cares about most is still, as retail investors, what should we do? Everyone is watching altcoins explode wave after wave, and it's hard not to feel anxious, right? That's normal. But if you blindly jump in, you might wake up to find yourself the one getting dumped on, becoming exit liquidity at the top. So right now, the key question isn't whether to get in, but how to get in as safely as possible.
Altcoins can multiply several times in value, but they can also be cut in half or even go to zero in an instant. Retail investors need to act within their means and diversify their positions. For example, if you can only handle a 20% fluctuation, don't go all in on altcoins. Leave yourself some room so you don't get wiped out. There are plenty of altcoins, but not all of them will survive. Before investing, ask yourself, does it have a real use case? Is the team reliable? Is there technical progress? If the answers are unclear, it's best to stay away. This year's hot sectors include DeFi, RWA, AI, L2, and MIM. but no one can say which will last. Diversifying your investments is the safest approach. Don't put all your chips on a single story. Even if one sector cools off or crashes, it won't hurt your overall capital. Altcoins are often driven by sentiment and narratives. A single tweet or a rumor on Discord can trigger huge price swings. Retail investors need to stay alert, set stop losses, and pull out immediately if the trend turns against you. Don't fantasize that prices will recover on their own.
So the truth about the crypto market is that risk and opportunity always coexist. The altcoin market in this 2025 cycle is bound to be extremely lively. But what's behind it? It's a loose macro environment, a shift to softer policies, and major coins leading the way and building momentum. So a boom in many altcoins is reasonable. For retail investors, the excitement is just on the surface. Staying calm is the real foundation for surviving in this space. Remember, many people actually lose money during bull markets. The real skill in trading is to hold your ground and wait for the right opportunity. Don't be afraid of missing out on the hype, but you must learn to avoid the pitfalls.